Yes, once again. As you know, this past week we had earnings come out from Tesla and it affected the stock negatively. It's my belief one of the biggest impactors is the announcement that BYD is gaining a lot of market share in Europe in the EV space, and it's at the expense of Tesla and other manufacturers as well. So we kind of wanted to review this because kind of when you put the numbers together, they're offering 40% off what Tesla and others have been offering their vehicles at. So we wanted to sort of talk through this as part of the process of preparing for Tesla's investment situation. And it probably explains why we haven't seen a nice move in the stock as usual since we've had earnings. This is Greg for Teslafaninsight. Thanks once again for joining us. If this is your first time, welcome. If you're a repeat visitor, welcome back. We also want to thank our Patreon supporters. If you enjoy the show, would like better information on investing and trading in Tesla and others, please join us. This is a sidebar note because we definitely enjoyed the investment process. But one of the things that I thought was amazing this week that I'm not going to cover heavily here, but I just wanted a brief note on the fact that, as you may notice, there's a bunch of articles about the fact that a recession was expected last year, did not happen. And now there's a discussion that the recession is going to be this year. And so everybody's trying to figure out the use cases for that to be the case. The problem I see right now with a recession is something called the Ukrainian war. As you know, they just got a $50 billion announcement relative to their general economy. And that didn't include how much they're going to be supported by the EU when it comes to weaponry, which is the next block of funding they're looking at. So why am I bringing this up and why is it affecting Tesla and everybody else? And that is that the issue is that when you have huge wars going on, and there's buying of equipment by potential enemies of Russia, combined with what the U.S. is buying relative to its support of the Ukraine, that's a huge amount of spending. And the countries have to do it, otherwise they could get overrun by Russia. So yes, I think the fundamentals were there for a recession last year, but now that the war is not over and Putin seems determined to maybe take half of Europe for himself, I believe this is the reason why recessions could happen. But with all that defense spending, it's hard to see how it's going to happen. And then add to it, oil prices are lower. So I'll leave that and get on to our show, but I wanted to put in thinking points of what to expect. So what happened is that after earnings, there was a discussion of, well, what's going on in Europe relative to Tesla's sales. Tesla's been cutting prices here, but they've also been somewhat forced to cut prices in Europe. And the answer to that is that there are numerous places you can go to watch this. I actually read and watched it on NPR in the coverage. There are a few points that were brought up. So they interviewed a BYD customer to determine how and why they had chosen BYD. That customer indicated 4 basic points. Point number 1, compared to Tesla and other EV manufacturers, they paid 20% less for their vehicle than if they had gone to Tesla. And it's not exactly, but you're almost talking, $17,000 to $18,000 less at that point. The second thing he pointed out was, along with the price cut, they actually got a price dip because they were given 8,000 euros worth of goodies along with the 20% cut, which included 2 years of free charging. So that's pretty amazing / brutal. The third thing that he pointed out was that, if you look at A and B, the third thing he pointed out is after 5 months of ownership, it seemed to work out pretty well. And this consumer was actually someone who's originally from the Germany area. So I'm bringing all of this up to you because that's a pretty huge number. Why did I say 40% off on my initial? Well, that's because if you add the 10% tariffs that Europeans have on those vehicles, the EVs are being offered basically for 40% off. And I haven't heard of anybody having 40% margins. So one has to think that those guys are actually dumping, selling them under cost to gain share. And then they can raise prices later on. And EU is not happy about it. And they've said they're going to have a response sometime in the next 6 months to this, which is likely includes tariff. One question is, well, why isn't the US being hit with that number yet? And the answer is that there's a 27% tariff in the US. So those guys would have to drop numbers. In order to be competitive, they'd have to go below Tesla here after the tariff, which means that they probably have to hit that 50 to 60% off, which I think would definitely be below their costs and catch dumping activities as an analysis. So the first thing that comes up is why in the world would they do this? So right now, I've sort of been indirectly studying China for the last aggressively at least 5 to 7 hours a week for over the past 12 months. And from a number of folks that have lived there and really have studied the situation, what they indicated was that, China's in really bad shape right now. I referenced to Evergrande, 300 billion in losses. And then everybody else that goes with Evergrande, et cetera, is another probably 600 billion. So we're heading towards $1 trillion worth of losses experience. The Chinese government is also reining in billionaires. So as you know, Alibaba, Tencent, a whole bunch of other companies have seen aggressive get rid of billionaires programs that have really destroyed a lot of value for shareholders and in these businesses. The next issue they're having is departure of foreigners. They're, as part of getting rid of the billionaires, there's also seems to be a get rid of the foreigners who include investors there, and it's sort of unknown what's going to be done to people. So it's better to pull back and work from a distance rather than have those folks in. So what I've seen and clearly articulated from a couple of data points, one is Jamaica, the other is several places in Africa. For the last, let's say, 30 years, 40 years, there are Chinese suppliers that have been shipping low price goods into the US, into the Caribbean, into Africa, all these other places. And after shipping those goods in, the retailers were able to mark it up and sell to local customers. There's been a switch. The switch has been particularly in countries where they've, particularly in countries where they've invested a lot of dollars in railroads or ports and other things. There's a new wave of Chinese process, which includes suppliers of goods to all these countries have now started coming in, buying local companies, and then you have the factories from China selling directly to consumers, eliminating the middleman. So there are large numbers of retailers who relied on marking up those Chinese goods that are basically getting wiped out. I had one gentleman I met who's from Jamaica, and he indicated that he had a distribution business where they basically were selling 22 van loads of Chinese goods, sort of at a distributor level, into small retailers all over the island. And as China's policies changed and they came in, bought a local retailer, and then started selling direct from the factory through their own retail arms, you all of a sudden had his 22 vehicles a month that he was going through dropping down to 3. So he then decided to retire to the US with his grown kids and move on to other work. So the bottom line is that the question has come up, how is China going to recover from this disaster that particularly happened in real estate, but that's rotating across a lot of other industries? And the answer is, you might call it dumping, but it's definitely price aggressiveness to find sales elsewhere. We didn't even discuss the fact that people like Apple and others have decided to offshore out of China for iPhone and other production into Vietnam, India, and other places. And so that has caused unemployment to really jump. So bottom line, there's a desperation in the process that they're doing. I believe that, you know, this 40% cut in price that we're seeing is a disaster because I have to say that for the rest of the show, I've got some good questions, but I don't have great answers. Let, Question number one is this. BYD actually is a Tesla supplier, particularly on the battery side. This is kind of big because a lot of the lithium is actually being processed in China, even if it's not mined there, if not most of it's being processed there. And then it's being sort of bought after processing. Well, the problem right now is how does this really work with Tesla and BYD? Should Tesla be still buying from BYD in light of the fact that they're now a competitor that has left China, has become a competitor in Europe, and you would expect in other places in the world before coming to the United States? Now, that's an interesting question because one of the suggestions is should Tesla be doing business with them if they're being forced into heavy competitive pressures from this company? The answer seems to be that Elon is saying that there isn't enough supply of lithium slash processed lithium. And this is one of the reasons why he's building a processing facility for lithium ion in Texas. And that way he can really go from all the way from mine to produce batteries all the way into their vehicles and will reduce the exposure to competitors in this fashion. One of the other things that I have to say that I'm really looking forward to seeing how this all works out. And the reason is that Tesla is rolling at a 60% plus market share in China for EVs. And one of the big reasons is that there's been a lot of quality control issues when it comes to buying electric vehicles from Chinese manufacturers, especially and including BYD. So a lot of consumers have really gone to foreign suppliers, including Tesla, to avoid home-based brands that tend to blow up and have all kinds of other issues over the short and long term. So one hope that I have is that we start seeing these quality control issues as we get in, and then consumers experiencing that will all of a sudden maybe pull back and say it's worth a premium to get into the EV space or back into the EV space with a better producer. So for now, one of the things affecting Tesla's stock price is, what's going to happen with pricing? How are they doing in the European market after being forced to match BYD prices that were 20% lower? I doubt that they're matching the goodie bag of 2 years of free charging. This is actually a strategy that's I've heard, been used by Daimler-Benz. For those of you who are watching our show from Europe, we really appreciate, if you know of people that have purchased, what their experiences are, how are they doing with the charging of those vehicles, are they experiencing any quality control issues? All of this would be of interest. So not on a huge basis because their market share is low. I believe it's about 7% right now for the Chinese companies in Europe, but this has definitely been affecting the stock prices of all the major OEMs, including Tesla. And I think it's slowed the Tesla recovery that we've been seeing on a quarterly basis as this has been going on. So overall, the goal of this show was just to introduce a discussion of the fact that the Chinese, initially in the form of BYD, but we do expect from other manufacturers, have now decided to go into a brutal sort of price aggressive entry into Europe. And I believe, this is one of the reasons why they sort of had Tesla introduce its facilities for production and then copied it as much as possible was in preparation for that situation. And so my analysis is that I think that the quality issues will start affecting people. And I think the market will bifurcate as much as it did in China, where Tesla has still a fairly large market share and maintains it because people finally find out that they're just buying overall a better product. But I think it'll be a while before that happens. And in the meantime, Tesla has to get up off a lot of market share until consumers realize what the deal is. I'd say note in the case of Toyota versus other manufacturers, Toyota has no problem getting and keeping share because people recognize it's a better built product, and I believe that's what's going to happen with Tesla and other makes, but it will take time for this to happen. So overall, I would say that this definitely slows our Tesla process for the quarter, but I believe that it'll turn around. But the issue is that it may take longer than expected, and therefore, cause some concern, and therefore we don't get our Tesla price back into 250s in between quarters, as usually is the case. At any rate, we look forward to your comments on this. Please remember to like and subscribe. We also want to thank those of you who've joined us on Patreon. And we also wanted to next move on to our health tips. So I've been working on this diet change relative to kidney issues where you're going for meat 3 days a week. I'm not 100% successful yet thus far on it, but I'm definitely working hard to, get the dietary stuff in to replace the protein that was being eaten with other things, salads, etc. And it tends to be easier just to do it with meat because that's how our food system's organized, but it's definitely necessary to make the change. So I wanted to invite you guys to try it out. 3 of your 7 days with meat during the week and the other none, and see how you feel. I think you'll be impressed. I have to say I felt better. Weight gain not as big an issue. Obviously you don't want to replace it with bad calories. Just a suggestion of an item you might want to add is steel cut oatmeal. On the organic side would be a suggestion, but whatever you feel is good for you, that sounds great. At any rate, I want to thank you for joining us. This is Greg for Teslafaninsight. Tschüss, au revoir, Heathrow, Hoda Hafez, Ni Hao Ma, Kambawa, Hey Do, Namaste, Arrivederci, and in Jamaica we say enough respect, walk good man. Thanks for joining us. Have a great day, and bye for now.